Is it possible for a 47-year-old tech giant to have a midlife crisis that actually goes well?
Oracle just strapped a rocket to its back, and the market is definitely here for it. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're diving into the database king, Oracle, ticker ORCL. Our research is based on data captured on September 10th, 2025 at 07:55 a.m. ET. But before we get specifically into Oracle, let's maybe set the stage a bit. What are the broader economic currents doing today?
Absolutely. Yeah, the market is waking up with a bit of a split personality. You can really feel that tension. S&P and NASDAQ futures, they're ticking up. Suggests, optimism for tech, but the Dow clearly lagging behind.
So selective bets, maybe?
Exactly. It looks like investors are picking their growth plays carefully, even with that broader market caution hanging around. And what's particularly noteworthy is that inverted yield curve in the bond market. Short-term bonds yielding more than long-term ones.
The classic recession warning sign. Right. Historically, it's often preceded slowdown. So yeah, that underlying caution, it's justified. We're also seeing, signs of slowing GDP growth and these stubbornly high government deficits.
Okay, that's a fascinating backdrop. So with those headwinds, how does Oracle's huge surge fit in? Is it becoming sort of recession-proof, or are those bigger worries still a big trip hazard for them? Let's unpack what our research found for Oracle itself. Yesterday, Oracle dropped its Q1 earnings. And yeah, there was a slight miss on headline revenue and EPS, but investors completely ignored it. And here's where it gets really interesting.
Yeah, what's truly fascinating, and probably the reason investors shrugged off the miss, is this jaw-dropping metric, remaining performance obligations, RPO.
RPO, okay. Future business, basically.
Exactly. Future business from signed contracts. It surged an astronomical 359% to $455 billion. And this isn't just vague AI and cloud deals. Our analysis shows Oracle is really pushing its Gen 2 cloud infrastructure. They're specifically tailoring it for big enterprise and sovereign AI workloads. They're landing these massive, multi-billion-dollar contracts, dedicated cloud regions, AI superclusters. I mean, they're tackling the huge compute needs of AI head-on.
So that RPO, it's like a giant backlog of confirmed money coming in.
Pretty much a massive backlog.
That $455 billion,
yeah.
It's just a staggering number. But here's the conflict, right? Traditional evaluation models like free cash flow. Our research pegs the stock around $138 based on that, and earnings-based, like $47.
Miles below.
Yeah, miles below yesterday's close of $241, let alone the, 32% pre-market jump we're seeing today.
Yeah.
It's like the old finance textbooks say one thing, but Wall Street just toss them out.
Right, saying this isn't your grandfather's Oracle anymore. And you've really hit the core of the debate. How do you value a company that's changing this fast? Our analysis shows Wall Street analysts, nearly 70% have buy or strong buy ratings. They're clearly siding with the future. They believe Oracle's big push into AI-fueled cloud has just fundamentally rewritten the story. So those traditional metrics, maybe less relevant, for right now, they're betting on that RPO.
Okay, so the analysts are bullish, but what about the market itself? What's the word on the street? Is the crowd really buying this new Oracle story, especially after such a huge jump?
Well, the sentiment is undeniably bullish. If you look at the auctions market, the put-to-call ratio is 0.77.
Meaning more calls than puts. More bullish bet.
Exactly. For every 100 calls, betting the price goes up, only 77 puts are being bought, betting it falls. That's a strong upward bias, and get this, short interest, tiny, just 1.35%.
Wow. So hardly anyone is betting against it.
Very few traders. So just pretty high conviction in this rally.
Okay, sentiment's bullish. What about the charts? Are the technicals telling the same story?
They absolutely are. The long-term trend, undeniably positive. There was a strong bullish signal back in July that's still in effect. And the charts show clear accumulation. Volume indicators suggest really robust buying pressure. Momentum, it's reaccelerating after a bit of a pause.
So more upside potential technically.
Technically, yes. But you should definitely expect some dramatic volatility. With a move this big, the stock's entering a whole new price discovery phase. But the technical picture does support this move. So, bringing all this data together, our research points towards a cautiously bullish outlook for Oracle.
Cautiously bullish.
Okay.
But you mentioned risks earlier, that huge 32% gap up could attract profit takers.
Definitely risks.
Those recession warnings are still flashing.
Right, yeah.
And, by traditional measures, the stock is trading at a really rich valuation. So why not neutral or even cautiously bearish? What's the absolute game changer that keeps it bullish, even if cautiously?
That's a great question, a fair challenge. For us, the absolute game changer is that $455 billion RPO. It's not just a big number, it really signifies Oracle's successful, aggressive transformation into a serious AI and cloud player.
It's proof they're actually doing it.
Exactly. These aren't just promises, they're signed contracts. And this whole explosive story, this transformation, it's powerfully backed up by that bullish market sentiment we just talked about and a strong technical picture that was already there before this news hit. The company's fundamentally shifted its growth path.
Right. So for you, the listener, what does this actually mean for the next few trading sessions? What's the battleground look like, especially after this massive pre-market move?
Well, the immediate challenge for the bulls is just holding these huge gains. Look for initial support to try and form around, say, the $308 level. If that holds, the next target would be testing that pre-market high up near $315.
And the downside, where does this short-term idea break?
If we see a decisive close back below $290, that would really be the invalidation level for this immediate bullish thought. It would signal maybe the initial excitement was a bit overdone, or at least short-lived.
Okay, interesting levels to watch. It really seems like AI isn't just for the fresh-faced startups, huh? It can definitely teach an old dog like Oracle some very, very profitable new tricks. So it looks like Oracle's midlife crisis wasn't about buying a fancy sports car.
No.
It was about building an AI rocket ship, a very profitable midlife indeed. Just remember, even the smartest dog can trip. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.